Stock market spectators seeing red flags from the NASDAQ. New economic data shows Americans are still sitting on their money. And there is hope for the Eurozone, at least for now. Spain and Italy showing some signs of economic health. All right, while Wall Street is watching and waiting, we turn to the Money Master. Welcome editor for the Financial Intelligence Report here at Newsmax. Jeff Yastine joins us on MidPoint. Jeff, good to see you again. How are we starting out the week?
Yeah, starting out the week well. The Dow finished up around 28 points. NASDAQ gained 11, the S&P 500 gaining 3.5 points. Trading like it's been for the last number of weeks, pretty slow. Well, let's just chalk it up to the summer doldrums. Nonetheless, the market's finishing in the green today. All
right, now I have in front of me from thestreet.com, and of course we all know that everybody has their opinion. Here it is, blowing bubbles, is the NASDAQ ready to pop? I have to worry about an article where the first line says, under the parlance of a teenage girl, the NASDAQ has gone cray-cray, which means crazy to the old folks here. So, all right, Jeff, bring us a little common sense in this. Ready to pop, how, so, and when, and where?
Yeah, you know, if we knew the answer to that, of course, we'd all be water skiing behind our yachts.
And we would not be cray-cray. There you go.
But there are reasons to be concerned. We had just today, this morning, we saw Intel is buying Alterra. Last week, we saw a company named Avago buying another chip maker named Broadcom. Typically, you know, when we see these sorts of large today's thing with Intel was a $16 billion deal. Last week's with Broadcom was around a $30 billion deal. Typically, when we see those, usually in tech, they do mergers and acquisitions deals, the big ones, at the tops. You know, whether it's 1 week to the top or a month or 6 months or a year, that's the thing nobody can really tell. With interest rates being what they are, you know, things could just still keep slowly drifting higher until there's some reason to change the equation, which really only comes, like we've been saying all along, from the Federal Reserve.
Why? Why, Jeff? Why? I knew that you had to start out the week.
It all goes back to interest rates and what it takes to either leverage up to trade, or for companies to leverage up to do these big deals. And that's the thing we were saying about in technology. These sorts of deals that are happening, they're happening because, in part, the organic growth is slowing down. So companies like these have to do their deals in order to continue to show growth of some kind. They buy each other.
All right, so let's see. Consumer spending unchanged in April despite people are making more money. What do we take from this?
Yeah, the small bit of the glimmer of hope here is that the manufacturing part of this showed a gain of 1.3%. Other than that, it was kind of a sleepwalking sort of economic report. Not much to really say in there. It seemed like people were mostly saving or banking what they were getting rather than going out and spending it. But this coming week, the next handful of days, is going to be huge. We have the jobless report for May that's coming out at the end of this week, and we have a whole series of other ones: factory orders, auto sales, the Fed Beige Book, productivity, all this week. So at the end of this week, we should have a better read as to what the Federal Reserve is going to do going forward.
30 seconds left here. The European Central Bank stimulus program, apparently it's working, at least early on, because we see Spain and Italy having some pickup in manufacturing activity. What does it mean for us here in America?
It means that there is some glimmer of hope that things are turning around in Europe. If it turns around in Europe, it means that our own expansion can continue, albeit at a slower rate. It just depends. Does it come at the expense of a stronger dollar versus a cheaper euro?
Well, Jeff, what I'm going to do now is I'm going to go ahead and start a day sheet here. And what we're going to do is we're going to watch this every single day. We're going to see how many days we can go and talk about the market without using the words Janet Yellen or the Fed.
Yeah, don't bet on that one, because I'm not going to bet on it, because I'm going to lose that one. You can't help but do the news today, the financial news, without mentioning any of those three things. It's so frustrating because you want to talk about organic growth, not this other stuff.
I was going to say the over-under might be 0.1 days. Remind everybody, go to Newsmax.com, click on the Finance tab, find out 24/7, 365 what's happening in finance. Jeff Yastine, thanks for joining us. We'll see you tomorrow right back here on MidPoint.